The march to World War III has begun. There's no way to know for sure when or if we'll actually end up in World War III, but tensions are escalating and the US is already selling weapons and military equipment to Ukraine. While we hope the talk of World War III is just saber rattling, this could be an opportunity for you, the retail investor, to ride the wave of higher earnings for every defense contractor who might benefit. Here are 5 defense stocks that should go up in price and possibly increase dividends during these turbulent times. If you stay until the end, somewhere in this video I'll throw in one bonus stock most investors wouldn't think to look at. These are not recommendations, nor is this financial advice. You should always do your own due diligence before investing into anything. Let's start this list with the companies who produce the weapons currently being sold to Ukraine. The Javelin anti-tank missile has been crucial for Ukrainians fighting against Russian tanks. This first company co-produces these missiles with another contractor on this list. It pays a quarterly dividend with a yield of 2.18% as of February 22nd. Despite some volatility on the share price, dividend growth looks solid. This is Raytheon, ticker symbol RTX. Next on our list is the company who works with Raytheon to co-produce those Javelin missiles. They're the biggest producer of America's nuclear ICBMs. They also build Black Hawk helicopters, radar systems, missiles and fire controls, satellites for both commercial and government purposes. Their dividend yield as of February 22nd is 2.49%. With the exception of only one dividend cut decades ago, dividend growth appears consistent. This is Lockheed Martin, ticker symbol LMT. This next company makes the Abrams tanks that were just pledged to Ukraine. This means they're going to sell over 300 tanks in the near future, in addition to their current backlog of orders. This company also builds Stryker fighting vehicles, bridge systems, and artillery. They pay a dividend yield of 2.15% as of February 22nd. This company is General Dynamics, ticker symbol GD. Since you made it this far into the video, before we continue, I'll tell you the bonus stock. It's no secret that the prospect of nuclear war has been thrown around quite often lately. While we pray it never comes to that, in the event the worst happens and we end up in a full-scale nuclear war, radiation pills like Nplate will be worth their weight in gold. The company that produces them pays a dividend yield of 3.57% as of February 22nd. This company is Amgen, ticker symbol AMGN. One of the main staples of military might is air power and airships to move troops. This next company produces Apache helicopters, the Osprey, Chinook helicopters, radar planes, B-52 bombers, drones, and even built Air Force One. They used to have decent dividend growth as you can see on this chart, but they dropped their dividends completely in early 2020. However, that could just make this a buying opportunity if we're about to prepare for war in the near future. This is Boeing, ticker symbol BA. Last but certainly not least on our list is one of the bigger producers of ICBMs, which can also carry nuclear warheads. They also produce surveillance equipment, targeting systems, drones, and much more. Their dividend yield sits at 1.46% as of February 22nd and shows solid dividend growth over time. This is Northrop Grumman, ticker symbol NOC. If you liked this video, you might also enjoy this one here on the screen. Subscribe to join the Cash Flow Club and hit the bell for notifications so you don't miss a single video.